Welcome back. You're tuned into Bazaar Morning Call, and we're bracing for a rocky morning because the Fed has spooked equity markets. They have sounded not dovish, not very hawkish, but not as dovish as what the street anticipated. And that's why the markets are expected to open with a cut of around 300 points. But a lot of stocks expected to move around. Dipan Mehta, Director, Elixir Equities, joins us on the show. Hi, Dipan. Good morning and good to see you. Well, let's start off with the top stock, Asian Paints, the big underperformer. They had troubles with regard to a new big powerful player coming into their space, which is Birla Opus. Now they got a bigger challenge because it appears some of the top level people are moving on. Some resignations is what we have. Your view on the stock, it's corrected a goodish bit. Competitive intensity is moving up as well. Your view on the stock?
Yeah, Nigel, good morning and thank you for having me on your show. I think the cup of woes for Asian Paints just seems to keep on overflowing. And this certainly is not great news for Asian Paints at a time when they need the best talent available within and outside the organization to take on the competition. This certainly is a setback, but look, Asian Paints is a very old company and I'm sure they have very strong succession plans for such key posts as well. But yes, it's a setback, but I don't think that that's really the issue in Asian Paints. The biggest problem right now, even apart from the competitive intensity, is the slowdown in urban spending, which is affecting volumes. And that I think unless you don't see a turnaround over there and the expansion of the market, I would be a bit circumspect when it comes to Asian Paints. And we have seen that the competitive intensity has played a role in terms of margins as well. So that also needs to be tracked. But I would say that existing shareholders, difficult choice for them whether to remain invested or sell. But certainly from a new investment perspective, I would avoid it.
Okay, that's Asian Paints. Asian Paints hit its high last year, towards the end of last year, 29th December 2023. Asian Paints had gone to a level of 34.22, and from that level, it's down more than about 30%. So it's been a tough year for Asian Paints and all the shareholders, 30% lower year to date, and of course from its 52-week high too. Dipan, hi, morning. We've seen the stocks correct over the last couple of days. Have you purchased anything, where the risk reward is attractive, you've gone ahead and bought?
No, Rima, not so, but it could be a good morning for investors like us who are sitting on some amount of cash, and such corrections are great opportunities. We have a list ready. I think I've said in the past also, like all these platform companies, also looking at increasing exposure in pharma, select software companies in the mid-cap space. So yes, there are some good quality businesses we are analyzing right now, but it's just that if stock price corrects by 15-20% in a market like this, or earnings catch up and you get them at a reasonable valuation, then I think the long-term returns can be great.
But there are quite a few stocks which have corrected 10-15% over the last couple of days. Nothing yet?
No, I think, Rima, what has happened is that these stocks which have corrected 10-15% from being super expensive are in the expensive zone. Another 10-15-20% correction would bring them to the reasonable zone. And that's the sort of zone that we are waiting for to start deploying whatever surplus cash we have. But as I said, I think, every time we feel that the market is correcting and quickly turns around as well. So let's see, is it different this time around?
Okay, no, I've got that. And I think, Dipan, hi, morning. That was well put. I mean, if you're sitting on cash, you welcome a fall. But if you're fully invested, you have to just grin and bear. That's the important.
I have a theory for that as well, if I can just elucidate just 30 seconds. So, even if you're fully invested, what happens is that if you've been a long-term investor, there are many stocks in your portfolio which have done exceedingly well, but growth rates, especially long-term growth rates, are slowing down. And a correction like this provides an opportunity to churn the portfolio from the stocks which you are sitting on profit or which you invest for a long period of time, but where you feel that the prospects are not as great and it's run its course. So you can also churn your portfolio in such a way that your the proportion of money in high growth stocks is steadily increasing at the expense of the weightage in the slightly lower growth stocks. So such corrections provide an excellent opportunity to do a big time churn in the portfolio, get out of strategic investment holdings which will be held for several years, and get into new generation stocks or weightage or in sectors where you have a lower weight.
Very well put. And typically, I'm assuming these are names, as you called it, right? I think you qualified it strategic. You've held it for a long time. It's made you a lot of money, but incrementally, they're not doing very much. So even if they have corrected a little bit in the current market fall, because everything corrects, it's still a good way to sort of think about switching out of some of these slower growth areas into stronger growth areas. It's a very important point, Dipan. And I'll ask you, which are those sort of, ideas which is on that watch list of yours? As you said, it's ready, and we discussed some of the names earlier. But we had to take a quick commercial break here as well. So we'll come back and talk a little bit about here and now. Sudarshan and Mitesh are going to be with us to help us do that. Stay tuned.